Okay, welcome back, guys, and thank you for tuning in. It's your boy Dubex here. So, today in this video, we're gonna be going about how to begin forex. Like how do you get it right? So, this video is not supposed to be a long video. It's just supposed to be a video that should be able to guide you, so that you learn the right stuff. You check because the most people who teach you how to learn forex, they go about teaching like the basic buy currencies or whatever, but they don't actually get into the technical stuff that you must know as a beginner. And this is where I'm trying to fill in the gap, right? So let's do it like this. So I created this PDF right here. So I've got this PDF that you're seeing right here, and it's got a bunch of topics. So it's like a syllabus. You check. So for me, I feel like it's a syllabus. So for any student out there or anyone who's been like in tertiary or any other thing, there's like a course outline. So like this is like a course outline for you guys. So uh, I'll put a link in the description so that you can be able to download this course outline and you can see it for yourself. But I'll try and upload it so that maybe I can keep updating it. But however, let's just try to break it down. So this course outline is the major topic, and one of the major topic here is technical analysis, right? So as a new beginner trader, where you are trading currencies, forex, right? Be it you're trading currencies, be it you're trading indices, you're trading metals like gold, right? We're not talking about the itsy bitty part of like what is forex and all that. I'm probably sure you guys know what forex is. So if you really don't know what forex is, just try to find another YouTube video which can just explain to you that it's the buying and selling of stuff, but but you really don't have to know that. What you have to know is this. This is what you have to know so that you can become a profitable trader. So in trading, there's this thing called technical analysis, right? You must be able to be technically capable as a trader to be able to do technical analysis in the market so that you can actually try and predict where the future price is going. So under technical analysis, you would need stuff like market structure. You need to understand what market structure is. You need to understand how to draw trend lines. You need to understand what are high probability setups, trade setups. You need to understand the theory of time and price, right? And when you got all that together, you also need to add on to fundamental analysis. So for all my economists out there, shout out to you. There's an aspect in trading called fundamental analysis. Most people could be fundamental traders. They just trade uh, the markets based on the economic conditions of the current market they're trading in, and other factors like news, politics, and all that. But however, fundamental analysis is also another driver of what the forex markets entail. And then after that, as a trader, if you got your technical analysis right, and we'll also dive in deeper into each of those subcategories in another part of the video, but we're just trying to break down all of the stages that we have. So we also have trading psychology, right? Trading psychology is coming in number 3. As a trader, you need to work on your trading psychology. As a newbie or beginning in the forex markets, you might think that this is not necessary, but then you realize, like, as you progress in your forex journey or in your journey to become a professional trader, you realize like your trading psychology is one thing that's always gonna be hindering your progress, be it in your early stages or in your later stages, or it's one of those things that could actually be affecting you to become profitable. So whenever you're trying to learn about forex, also make sure that you're working on your trading psychology. That involves your discipline, your risk management, and all that. But we'll dive in deeper into it. And then the fourth one, we also have risk management, right? In forex, it's very crucial that you are able to manage risk. It's like gambler's ruin for all those who've done states or statistic major or some states in tertiary, or know that you probably know something about gambler's ruin. And gambler's ruin is simply a scenario which tries to predict how long the gambler can play up until he loses his money. So, which is why if you think forex as gambling per se, you would keep winning if you gamble less. Like if you have $10, if you gamble 10 cents every time you feel like gambling, you're gambling 10 cents. you're more than likely never to blow your 10 US dollar, right? Which is your capital. But if you start trying to gamble with $2, $3, $5, I'm pretty sure you're not gonna gamble a lot of times. You're probably gonna lose that money, and that's how forex works. So that's the whole risk management aspect of the forex section in that section. But we'll also dive in deeper into it, and then we'll also look at trade journaling, right? As a newbie, this might be a bit hard for you to actually trade your journal, but this is like the process. First, understand the technical analysis. Go to the fundamental analysis. Understand that, and then work on your trading psychology. And as you work on your trading psychology, your whole forex journey, try to journal your progress. Like when you were a beginner, whenever you entered trades, how were you feeling? Were you nervous? Were you fearful that you're gonna miss the trade? Did you close your profits too early? What are those emotions? So you need to work on that so that when you be able to put it in a trading journal, you can look back. And right now I actually have a trading journal that I used to have like a year ago, and I don't use it now, but when I look back I can see, okay, this is how I used to think. And then as I read one of those lines of code that I used to write, I can clearly see that no, this is not necessary anymore. Like I'm past that. It's check. Like I don't have this problem no more. So that's how you are able to conquer and also develop on your trading psychology. And then also go to back testing, right? This is what lots of people actually don't tell you in this forex market, right? So back testing, let's talk about back testing. What is back testing? Back testing is generally where you simulate past or historical forex data, right? So it's like you literally go on a software that simulates past events of the actual forex market, the charts, and then you get a chance to relive them as if you were present at that day. So this allows you to go back in the past and start trading what happened in 2020, what happened in 2015, what happened in July 2017, and all that any day you want, right? So there are some backtesting software that are out there, but I also have my favorite one, the one I use. If you guys can afford the expensive ones, I use Traders Casa, and I'll put a link up in the description so that I'll put a link up in the video so that you can be able to follow through on that video on Traders Casa and how to use Traders Casa. And then also there's a link in my description if you wanna join Traders Casa. There's a powerful backtesting software. And then after the whole idea of backtesting, right, is instead of putting your real money inside the markets, you actually use uh, you simulate your real money in the past. So this allows you to enter in the market, and you can also simulate many trade setup as long as you can keep back testing, right? No one's gonna stop you. If you can back test for 4 hours, 3 hours, then kudos, that's you, and it actually was gonna work good for you because the more you back test, the more you become familiar with all the concepts that we've been talking about, the technical analysis concept, the fundamental analysis. You can put them, piece them together, see how NFP or CPI news data affects the markets when you are in it real time. Don't just try and wait to trade the markets real time, because now you can jump into different forex commodities. Like you can jump into currencies, you can go jump into indices, you can jump into metals, and you can just trade and try to come up with something tangible and track your trades. That's also on the psychological part, right? Trading psychology also works like how 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 many trades do you take? If you take a series of 15 trades, how many were profitable? How many were losses? And then now you can be able to gather that information and start tweaking it so that you'll be able to work on your risk management, your risk to reward ratio based on your win rate. You check. So that's all it. And then the other thing is putting it all together. So putting it all together, the last section, this is where you actually then now are just putting all that you've learned together in order to create a sound trading plan. And then when you create a sound trading plan, now that means that you are able to uh, follow a system that you have made. It's rule based, and you are generally just following through what your system says. If your system says if you 10 pips away from your take profit, hold, hold. If your rule says if your stop loss is, if you set your stop loss, you don't move your stop loss, don't move your stop loss, right? If your rule based system says take partials at such levels after such a move in the market, then do as is. And now you'd only realize, like, the moment you deviate from your rules, that's when you fail to be disciplined, and then you lose a lot of money, and then you come back crying saying Forex is a scam, right? Forex is not a scam. It's a scam if you're not doing this thing professionally. So we're here to try and help you guys do it professionally. And yeah, this is it. So that was just the basic whole idea. So now let's try to jump into the trade. So I'll just summarize it a bit. So we've got our technical analysis right here. Let me put an arrow. So we've got our technical analysis, and then you go to your fundamentals, and then what does this do? Maximizes. Perfect. But I don't have the item no more. Okay, I can't draw anymore. So sorry for that. And then you got your trading psychology, your risk management, your trade journal, you back test, and then you put it all together, and then you create a sound trading plan. So let's go back all the way to the top and talk about market structure. So, what is market structure, right? Market structure, guys, basically it's how we see those charts. You see, when you look at the forex charts, right, they just look like a mess. You probably actually don't even know what those green and black lines and green and red lines are doing, right? And it just seems so chaotic. You can't even interpret the data. If you look on the left, there's price, but then you can't even see if going up or down is a good thing. You see buy and sell, all that chaos, right? So what you need to do as a beginner is to understand candlestick patterns, right? There's many YouTube videos out there that will teach you the basics of candlestick patterns, right? Go there, find out, learn about those candlestick patterns, understand what the open, high, low, close of a candlestick is. So that means you understand what a wick is, the real body, what bearish means, what bullish means, those small nitty gritty stuff, right? And then boom, you are done. So this is just basically the basics of how to interpret a candlestick and a candle chart. Boom, you got that. And then now dive into market structure. Find videos that will teach you better on how to understand market structure. And these are videos which teach you on how to identify an uptrend, a downtrend, a ranging market, impulse, and retracement, right? So these are the keywords that you should be looking for when you're trying to understand, because you need these basic foundations to be able um to be able to pick up high probability trade setups. You also need to know what break of structure is, right? If you search it, it's there on the internet because there's so many people teaching smart money concepts. You also need to understand what a change of character is, how when the market is deciding that it's changing character, you need to understand what discount and premium is. Basically, where is it, where is safe, where is there fair price in the market? Where would you actually want him to? Because remember, you always hear the words buy high and sell low, right? Typical forex terms. But the real idea behind that is that if you are buying, if the market pushes up, if the market pushes up, you wanna buy it low right here so that you can buy it up again. So which is why the market moves like this, because you wanna buy it at discount, boom, you buy, boom, you buy. So that's the whole aspect. So you want to be buying here, you want to be buying here, you want to be buying there, you want to be buying there, and all that is probably based on, it's pretty much based on discount and premium. And then you also want to look at liquidity grabs. Like, what's liquidity grabs? So generally there's orders resting above here, orders resting above here, orders resting above here, and when price goes and takes liquidity, and this retracement could be something as seen as a liquidity grab. And you need to understand what order blocks are. Order blocks are generally areas of interest which are usually in this region right here. When the market pushes up, it comes back down, taps into the area of interest, and then pushes up. And then fair value gaps are some things that are usually in the charts, usually in the continuation, and you can just see them as they push up. But we will dive deeper into them in a separate video. But in all that, you need to be able to pick up a general confluence, right? And these confluence is just a set of convincing um, things that you've seen in the market, so that you can be able to uh, decide, okay, let me take a trade because I've got 1, 2, 3, or I've got ABC things that are aligning. And then also on market structure, you need to be able to identify how to draw trend lines. And drawing trend lines is also very important, because you see, like in this general trend I drew, there's a trend line which is moving something like this, right? So that's how you should be able to be understanding how to draw trend lines. Drawing trend lines can be very tricky, and if not taught right, you could actually be drawing the wrong trend lines. Personally, I believe that the markets, the trend lines move in something that I call the theory of parallel shift. I believe that the trend lines always move in a parallel direction, right? And it's always the case that you probably don't understand where the parallel line is starting from. But if ever you identify that parallel line, you always be able to see that price will always bounce back up until it breaks off that parallel line, and then that's when price can actually move to the downside. You check. So that's my theory on parallel shift. So it's all about identifying the key main parallel line and then just drag it out. And then trade breakout. This is a breakout, and then trend line projection. That's all there is here. But generally, trend lines help you to identify sniper entries, breakout entries, and when the market could actually change of character. So yeah, that's something that I also consider. And then over here, yeah, it's just basically an understanding of what I'm trying to say, but you can read the content summary for yourself if you feel like I got over where your head, or I got over your head when I was explaining this stuff. And then let's move on to the other concept, that's the high probability setup. So when you have taken those first two steps, you must be able to identify high probability setups. And how do you do that? High probability setups is when you are able to identify a trade entry and identify a trade exit, identify take profit, and I also have something that I use, Fibonacci take profit level, which is something that helps me to identify where I should take profit. So if you're able to put that together, then now you can start adjusting and creating high probability setups, and you only trade your high probability setups, or setups that you see are most likely to be profitable. And then theory of time and price. This is best explained by ICT himself. So I encourage you to go over to ICT um, and watch his video on Market Maker Primer course. It's a playlist. It's called Primer, Market Maker Primer course. Right. In that course, right, there's like 21 videos. But is by far the best person who could ever teach you guys the theory of time and price. So he basically goes on to teach you that there's many trading sessions, like London, Asian, and New York trading session, and there's an overlap between the New York and London session. So basically, in that whole series, he's just trying to teach you that there's a specific time you should trade, and specific days you should trade, and all that, and the specific times to when you trade. So you can't just trade anytime you want, because you can't be trading whilst the market makers are sleeping or at lunch. So those concepts will help you realize that you can't just be placing trades any time of the day. You need to place trades when there's volume in the market, so that you can see your trades move, rather than just ranging to the side and you just lose hope and just close your position. So basically, theory of time and price, go check ICT, and then I'll also maybe link his video down in the description for the playlist for you to watch. And then the other part was now on fundamental analysis. So that's done on technical analysis. We're now looking at fundamental analysis. So on fundamental analysis, we look at high impact news, right? High impact news affects the market, because you see that those charts they are normal up until news comes in, and news usually pushes the market to reach untapped heights or untapped areas of the market that could not be tapped in by normal price action, right? So that's when you must go and research. You should understand what news drives the market. Yeah, I just named a few, like consumer price index, CPI, unemployment claims, non-farmers payroll, the popular NFP, FOMC speeches like presidential speeches and federal rate reserve changes and all that, and bank holidays. You need to pay attention to those, because you wanna be trading a day when the banks are closed, right? So that covers that. You can read more on the content summary to get more information on that. And then we're looking at trading psychology. So I did speak about that, but generally in trading psychology, it's all about mastering your mindset, right? And yeah, trading psychology is all about mastering your mindset. And here we talk about how you should think in probabilities. So I recommend Mark Douglas. He's the best guy if you guys want to learn about uh, if you guys want to learn about trading psychology. I've read many books, but they never came to me. It never came to me like that up until I watched a playlist of Mark Douglas. I'm not sure I'm able to find the playlist because some of them have been being taken down by YouTube. I don't know why, maybe copyrights and all that. But Mark D, is one of the best uh, teachers about trading psychology. So he talks about thinking in probabilities, how you should look at trading as something that's natural in the sense that you cannot control it. And when I say you cannot control it, no matter how much right you are about the trade setup and how much you think that it's a high probability setup, but the fact that you're just a mere participant in the market, right? You cannot guarantee that your trade is going to play out. So what this means that is that there's probably another dunderhead on another dimension across the world who's just going to go against you, but they actually got more volume and they can move the money against you. So it's all about conviction. So sometimes you might have conviction, but another dunderhead might just move you out of your conviction because he's got more capital or he's got more funds to actually move the market against you. So his whole idea about thinking in probability is that because you never know when you're going to be right or wrong, just be able to know how often you are right or wrong. So that means when you start journaling your trades and then you realize, okay, I've got a 60% win rate if I take 1 to 2 setups. So that means overall, I'll be in profit over a series of 15 trades or 10 trades. So that means when you start thinking in probabilities, each time you hit a loss, you are not quick to judge yourself to say, "Ish, my trading strategy is not working," or I got in too early, or I didn't follow my trading plan. But you understand that, oh, I did follow my trading plan, it didn't work out. But the main thing that's at play here is that it's just one of those trades among the 40% that actually won't play out. So you put less stress on yourself as a trader, and thinking in probabilities means that even if you lose 4 trades in a row, you realize that you're probably gonna bang the next 6 trades in a row. And that's how thinking in probabilities actually removes fear of missing out, code popularly known as FOMO. And most of your new beginner traders, especially if you start trading your own capital and it's like a lot of money and it's money that you have invested in and all that, you have fear of missing out for the rest of your trading career, especially if you don't take it slow. And then also something, there's impulsive trading. So you don't want to be an impulsive trader, so you have to work on that. And also like how should you be cutting profits, how you should be adding to how you should not be adding to losers, accepting the risk, managing risk, and accept all the types of trading styles and scalping strategies like intraday and swing trading. So this is all some of the aspects that Mark Douglas talks about, and I recommend just Google Mark Douglas, read his book, Trading in the Zone. It's a good read, but it's long for me. If I'm a beginner, I ain't gonna be watching that. I'm just gonna watch his YouTube videos, and that's gonna summarize basically the gist of what he's trying to say. And then let's move on to the next. Move on to the next. Talk about risk management. Risk management, basically it's how to keep your money effectively, right? When we talk about that, we basically talk about, okay, what's a risk to reward ratio that you accept? If you are going for 1 to 3 trade setups, right, that means you're actually a very good trader, or you actually have a low risk appetite, right? It depends, because the amount of money that you're risking depends on that 3 years. You might be having a $10 account, right? Say you have a $10 account, and for every trade you lose $1, so you're down to 9. But for every trade you win, you gain $3, so you'll be up to $13, right? You'll be up to 13. So that's basically risk to reward ratio. And if you keep doing it like that, it depends. So risk to reward ratio generally depends on the type of a trader. I've realized like 1 to 3 setups are good, but they also require you to have a low stop loss or a tight stop loss, right? Stop loss must be small. However, if I'm taking like a 1 to 2 setup, I have a bigger stop loss, and that allows me to leave the market so that I can see it play out. Going for 1 to 1 setups is something that I've been thinking about a lot lately, and I've realized like 1 to 1 setups could actually work for me, because I've realized if I'm taking 1 to 3 setups, probably I have a 40% win rate. You check. If I'm taking 1 to 3, which means the 40% that I win, because they are 3x, they could make up for the 60% I've lost. But if I'm taking 1 to 1 setups, and 1 to 1 setups allow me to have enough um, risk on the line, like enough uh, stop, right? That means if I'm taking 1 to 1 setup, I'm 50% sure, and 50% sure allows me to be right most of the time. So I feel like maybe I could have a 90% win rate if I'm taking purely 1 to 1 trade setups. And that means in a series of 10 trades, I would be up $9. You check, which is actually a good thing. So that's the other thing. And then here we also talk about how risk management also works on stop loss management. We've talked about that, taking profit margins and taking partials, which is like removing some profit off the table, position sizing, how to add more to your winning trades. That's also a key aspect that newbies should be able to pick up in the future, right? And then we also talk about leverage. As beginners, you probably don't understand what leverage is, but leverage is something that could work with you or against you. Generally, what I'd say that brokers typically that offer unlimited leverage, they make more money off of beginners, because that means if you base leverage initially just it's buying power, right? So let's say a 1 to 100 or 1 to 100 leverage, it allows in the fact that let's say your buying power increases by 100, and 1 to 30 your buying power increases by 30. When I mean buying power, I mean buying and selling both ways. It's applicable. And then, but when you have a 1 to unlimited leverage, that means your buying power is unlimitedly leveraged. So if you were gonna come in the markets with $1, that $1 could potentially earn you an unlimited amount of money. Not literally, but in a way that that's how much buying power that same dollar has, right? But it's got units and bases to it, so it's a bit just on top of my head at the moment. But generally, if you are a beginner and you want to learn how to trade forex and manage your risk, you would be looking to have brokers that could open for you a leverage of 1 to 30 or a leverage of 1 to 20. You see? So what this basically means is that if you're opening accounts on a 1 to 20, it means you are less likely to overtrade, right? You're less likely to overtrade and blow your account, especially on the overtrading part. Like overtrading is like, let's say you're in a losing trade, you want to open another losing trade. You check. And let's say you're in a winning trade, you just made a few profit, and then you want to add another position. That will be stopped by the broker because his leverage is 1 to 20, so it won't allow you to keep on adding meaningless positions, and that helps you to start developing that trading discipline that you might need when you are in bigger account sizes, or when you now have unlimited leverage and you're actually trading profits and all that. So that's basically the whole idea, and that's what I would think is very important in terms of risk management. If you're practice with low leverage, and yeah, let's go on to the next. And then the other next thing was how to journal your trading. How to journal your trade and trading journey. So here you should be able to journal your trade. I also put a link up in the description or somewhere along. I'll pop up in the video, a video on how you guys should be journaling. I'll show you how I journal my trades. I use Excel because I'm actually quite proficient in Excel, an Access student. So basically, hey, I'm all about Excel. So I use Excel. No need for me to pay for other backtesting software, but only when I'll afford, I'll actually do it. It's just that I don't afford one right now. But what I would do is that I backtest on Traders Casa, and then I take the information from there manually and I put it in Excel, and then I can code my item in R. I can do lots of stuff with it. But basically, yeah, that's what I'll do in Excel. And then talk about how to backtest in Forex, right? So backtesting, I was just speaking about it. This is where you should be understanding that why is backtesting important and why do traders need to backtest and how long should I backtest for. So if you are a seasoned trader, you probably just backtest for fun because you probably got a new strategy that you're just trying to tap into, or someone just told you this, or you just figured something out, or you just got another aha moment and you're just trying to tap into, okay, let me tap into this, tap into that, and you just keep on tapping into everything that you can tap into up until you can't tap into anything no more, up until you're all tapped out, and you keep tapping that shit. So basically, that's what I'm saying, that that's the purpose of backtesting. But if you're a newbie, backtesting is very important because it will get you that momentum to start doing things professionally instead of just funding your account, blowing it, and you keep asking yourself, "Hey, what's wrong with me? What happened? Hey, they attacking my stop losses, or they stop hunting me, or the broker knows my positions, or and all that and all that." And then you just feel like the markets are against you. No, it's not that they're against you. You got them on the wrong foot, right? You need to be humble, eh? Stay humble, eh? Yeah, stay humble, eh? And then so that's why backtesting is when I encourage all new traders to start with backtesting. Do it on a demo account, right? Not a demo account, but backtest, because a demo account will allow you to have virtual money and you just place trades, but you're not learning the skill. But backtesting will allow you to develop that skill because you're actually literally starting at an unknown time and you literally see through and you realize, okay, I fucked up. Check, I fucked up. I literally fucked up. But you won't feel it like emotionally because your money is not on the line. But it will give you that edge to see how your edge is actually playing out. And then the last thing was putting it all together. Now, which was how to create a sound trading plan. So after all this I've been ranting about, it's about you just taking all this, putting it together, and then actually just making it work, right? So this is where you actually now just putting this together and making something off of it, like a proper trading plan, something that you can follow, something that's rule based, something that you can also refer to whenever you feel like you're about to start just doing something stupid in the markets and all that. So basically, yeah, that's it, guys, and I'll put a link in the description for access to this PDF. If you wanna join my mentorship program, no problem. I'll be taking in students where I can show you guys a deeper dive into the bits and nitty grits of this. I don't know by the time you watch this video, but I actually got a small promotion that's going on where it's probably just free for like a week or two, where you guys actually get to see me explain some of this content in a deeper space. I didn't want to be selling courses and all that, but the only reason I do it is because it's a lot of work, right? So it only takes someone who's made enough money to give this thing for free to the public, like what ICT has done, because he is a millionaire. He probably doesn't even need all your money, which is why I still recommend him like as the ultimate forex person you should learn to besides me. But the problem is with ICT's concept is that there's so much stuff that if you're a new trader and he's releasing a lot more stuff. He recently opened a Telegram and he shows, my God, I'm actually shocked. Rather, there's like lots of audios in that Telegram channel. There's so much going on that if you really knew, it's a lot to take in and you just can't absorb anything meaningful from it because now there's just a whole lot of things. But as someone who's been trying to follow up and trying to take what works and what doesn't, I probably now understand what probably could work for you since I was once in your shoes as well. So you probably be able to understand a lot more or understand my take from or my perspective. So which is why the energy I've put into making this work for myself and for the people around me. Um, it's lots of sleepless nights and all that. So it needs to be repaid somehow. You check, like nothing is literally for free in this world. You check. So I'll only be giving people this stuff on a silver platter sometime in the future. When I'm also at that level where I'll be advocating, giving back and all that. But for now, it's all about the money, right? So if you guys really want to get down and be part of the team, there's a Discord link in the description. I've got a Discord community. We'll be sharing signals there. We'll be just growing a community, basically like a community fan, where in years to come, I'll be popping up to your guys' places, collaborating, talking about trading and all that, and hopefully one day is one day. But otherwise, it's been a minute, and thank you guys. My voice is actually dying out, but yeah, cheers, guys. And also be sure to subscribe, right? Be sure to subscribe. If you didn't subscribe, there's something wrong with you. Hey, Baba, subscribe when. Otherwise, cheers, guys.